Good morning, everybody. Thanks again for making time to join Craig Francis and I for this webinar. Delighted, as always, to be presenting to you this morning our results for the second quarter of the financial year. It's been an eventful quarter for the world economy, for the energy transition, and certainly for Genex as a company, and we're really excited about the prospects ahead. So we're continuing to build out our diverse renewable energy project portfolio of energy and storage projects on the NEM, which will provide clean energy to over 400,000 homes by 2025. As you know, our flagship project is at Kidston, where we've created a clean energy hub comprising a 50 megawatt solar farm, Kidston Solar, which has been in operation for some 5 years, consistently one of the top performing solar farms in the country. Our flagship project, the Kidston Pump Storage Hydro Project, 250 megawatts, 8 hours storage, which is under construction. The Kidston Wind Project, which is our next pipeline project, very excited about that and bringing that to market very shortly, 258 megawatts, and the prospect for more solar to come. Our Baldercombe Battery Project in central Queensland, that's the first of our large-scale battery storage strategy projects, 50 megawatt 2-hour battery, which is under construction as well. And really excited about our latest pipeline development, the Woolly Creek Clean Energy Project in South Queensland, which is a combined large-scale battery and very large-scale solar opportunity. And of course, our New South Wales Gemelong Solar Farm, 50 megawatts, operating merchant on the market. So I'll hand over to Craig just to talk to the highlights of the results for the last quarter. Craig.
Thanks, James, and good morning, everybody. Good to be speaking again and presenting our results. So for the quarter, we announced our generation for the 2 solar farms, totaling 61,766 megawatt hours, KS1 being 30,791 megawatt hours, and Gemelong 3975 megawatt hours. If we compare the first sort of half result, sort of KS1 slightly up on last year and Gemelong slightly down. However, it's a different story when you look at the revenues, and so for the quarter we've recorded revenues of, it's actually 6.2 million. There's an error in that figure on the presentation, so we'll shortly issue an updated presentation with the correct figure. 6.2 million, KS1 being 2.8 million, and Gemelong 3.4 million, for an average price of $112 a megawatt hour. And for the first half 23, revenues of 13.4 million, which is a 21% improvement from this time last year for the first half. And I guess, that sort of points toward, our pricing has been trending down a little bit for Gemelong since sort of Q2 of calendar year 22, where we saw that significant price volatility and just general increase in disruption in the energy market, which flowed through to our really strong results. The pricing has trended down since that time. However, it's important to note that we are still well above where we were this time last year. So pricing does remain elevated, both spot market black energy pricing and LGCs. What we are seeing, and that sort of flowed through in the pricing that's been received, and also the generation, is increasing intraday volatility. So prices going towards zero and sometimes negative in the middle of the day. That obviously impacts revenues for the solar farms, but importantly is a really solid indicator for our storage portfolio, and particularly with Baldercombe coming online later this calendar year. In terms of other highlights from the quarter and the first half, the key one, operating cash flow continues to be positive. Recorded 3.2 million for the first half, another $1 million this quarter, and the business is really performing well and is cash flow positive from an operations perspective. Finished the quarter with $65.3 million of cash at bank, similar to where we were at June and September, and again, sort of a good environmental and HSE performance for the quarter, with no LTIs and no environmental incidents. This is just a recap of the portfolio, and we've just updated this slide to really reflect updated market revenue curves and also CPI. As we've sort of discussed in these forums before, our contracts are linked to CPI, and therefore benefiting from this recent increase in CPI that we're observing in the broader economy. So this sort of slide just shows the FY22 full year result. You can see FY23 expecting to be largely consistent. 24 shows the impact of Bouldercombe coming online, and that's in the second half of calendar year 23. And then FY25, we start to get the contribution from the hydro, a half year in FY25 and full year in FY26. So still a really solid portfolio of highly contracted revenues, and that's where we look to make strategic additions of merchant exposure where we can, given 83% of the portfolio is contracted for the next 30 years. So that sort of revised CPI adjusted look forward is sort of $95.6 million annual average revenues till 2055. And back to you, James, to go through the hydro.
Thanks very much, Craig. So yeah, a very exciting prospect, and the key for that very strong, stable revenue that we see on the previous slide is obviously the Kidston Pump Storage Hydro project, which, as you know, benefits from a very strong up to 30-year inflation-linked offtake agreement, very strong, stable rental agreement effectively from Energy Australia, and underpinned by a long-term low-cost interest rate facility from NAIF for $610 million, which is over 80% of the project cost. We've had very strong financial support, as you'll know, from both the federal and state government. That NAIF $610 million loan, a $47 million grant from ARENA, and the Powerlink funding support for the transmission link from Queensland Government. A fixed price lump sum contract with two outstanding tier one contractors, McConnell Dowell and John Holland, doing an excellent job at site. Obviously, the currencies are fully hedged along with the interest rates as part of the EPC contract, and construction is on track for energisation in the second half of next year. Progress on the project in the last quarter, notably the Wises Dam, that 6 kilometre circumference upper reservoir, 20-metre high dam, is now 87% complete in terms of the bulk earthworks, with just the screed surface and the liner to come. The dewatering pumps, this is 6 800 kilowatt each pumps mounted on a pontoon in the Eldridge Pit lower reservoir, have been installed and energised and are starting to pump water, which needs to be transferred from the lower reservoir, the Eldridge Pit, into the upper reservoir, the Wises Dam. Some 180 metres of head needs to be taken from one pit to the other to allow the construction of the tail race tunnels to the underground powerhouse cavern. So that's underway, and that will take most of the year to complete. Andritz are continuing with their manufacture and shipping to site of equipment. We've received some 3 shipments from Andritz, mainly embedded parts, spiral casing, draft tubes, which are now on site ready to be installed once we get into the powerhouse cavern. And the rest of the equipment shipments will start in April and will continue for the rest of the year. We'll have all the equipment from Andritz on site effectively by the end of this year. And as I say, the project remains on track for energisation in the second half of 2024. As far as the underground works is concerned, obviously we announced to the market that there was a water ingress event back in September. We successfully dealt with that by dewatering the tunnel, plugging the holes, kicking off the critical path activities again in early October. So really just 10 days after the event, or a couple of weeks after the event. And we completed the MAT redesign and started tunnelling again in early December. So on the next slide, just wanted to take some time just to talk through what that means, what happened, and what the realignment means for the project. So just on that drawing on the right, I think Craig's just going to show. So what this shows is the green, that's the main access tunnel from the portal at the surface spiraling down. This is the construction that took place last year. The green is the excavated tunnel, and just at the point where it turns red, that's where we hit this high pressure water, which we announced on the 24th of September. So we obviously stopped tunnelling and took steps to mobilise drilling equipment to that face to be able to drill in different directions, to basically to the left, to the right, and below the tunnel alignment, in order to ascertain what that feature looked like. In the meantime, while we were mobilizing that equipment, the first priority was to get cracking with the critical path activity. And that was the construction adit, which you can see the brown, fixed brown line, which Craig's showing is the original alignment, which you can see is exactly at the point, starts exactly at the point where we hit the water. So we pulled that back some 25 meters, 30 meters back up the tunnel, and that dotted brown line is the realigned CA1, which is now very close to the powerhouse cavern. So that kicked off in by mid-October. That was already underway. So having initiated this drilling program to ascertain the feature, it became clear that that red line would have been going for too long, 100 meters plus through this high pressure water zone. Not impossible, but very slow, expensive, and not without risk. So our team, together with the contractor and the designers, came to the decision the safest, most prudent thing to do would be to realign the tunnel and to restart the excavation on a realigned route, which is that yellow, what we call the safe yellow option, which is not only coming down well away from that water feature, but is actually tunneling below the safe green zone, which we've already excavated earlier last year. So that yellow main access tunnel is well underway. We've got about just under 500 meters still to go. It goes into the cavern at exactly the same spot as the original alignment, and it's the design is effectively the same, 6-meter dimension, but just on a new alignment. And that Y junction, that yellow junction for the original tunnel, that was completed at the beginning of December, and the tunneling continued on the new alignment from that date. Important to note that now we are tunneling on multiple faces. The main access tunnel itself, we're in the process of completing the CA1 adit into the powerhouse. We're very close to the powerhouse. We expect to get there this week. And there's a further adit coming off that CA1, which will start the raise boring of the vent shaft. You can see the two green vertical shafts that are marked. The closest one to the CA1 is going to start raise boring in the next 10 days or so. So lots of activity underground. We've restarted, and we're well on track to complete those works this year. So just looking ahead, the project schedule, we've shown this slide as it progresses over time. So we've obviously now completed the detailed design. We're very close to starting the powerhouse cavern excavation, as I mentioned. Hopefully this week we'll be able to tick that box. We'll see the Andritz main turbine generator and related equipment arriving at site during the course of this year. The pit dewatering will be completed by the end of this year. And obviously next year we're into installing the turbine generator equipment and related equipment. The transmission line from PowerLink will be complete, and we can start energization and commissioning. So turning to the battery strategy that we have, the first project is the Baldercombe Battery Project, a 50 megawatt 2-hour battery in central Queensland, a very strategic part of the network. We're progressing very well with construction of that project. The Tesla megapacks are on the water currently. They're due to arrive in the next month or so at site. And all the balance of plant equipment, you can see the foundation pads are all prepared and ready to receive those megapacks. And we're on track for energizing well before June this year. Just to remind, it's a fixed price supply and works contract with Tesla and CPP respectively. Both Tesla and CPP have worked together on a number of battery projects. They know each other well, and the interface is well managed. CPP is actually the contractor subcontracted by PowerLink for the PowerLink scope of works as well. So it's a pretty seamless arrangement. Currencies and interest rates, again, fully hedged. And as a reminder, we have a very innovative fixed and floating revenue structure with Tesla, whereby Tesla will run the battery using their auto bidder system, and for an 8-year period they will guarantee a minimum revenue floor and effectively run it on a merchant basis to optimize profitability for the project, and we have a sharing mechanism with Tesla which rewards them for that activity. So the project will provide significant exposure to price volatility events. We've seen a number of those in the last couple of years, and we expect those to continue. So we're very excited to see that plant come on stream and start generating revenue in the second half of this year. So the current focus of activity on our pipeline is the Kidston Stage 3 wind project. We've had a very active quarter. We really ramped up our development activities on the project. We ran a process and selected Goldwind as the preferred turbine generator supplier and installer. Goldwind have been extremely impressive, actually, in terms of their responsiveness and engagement, and we're working with them under an early contractor arrangement to really progress the design and get the grid connection process underway. A review of the transmission capacity, you'll recall that we're using the spare transmission capacity on the new PowerLink line that's been built predominantly for the hydro, has enabled us to increase the capacity from previously around 200 megawatts up to 258 megawatts. So that's obviously favourable in terms of getting economy of scale. And delighted that the Queensland government has again recognised Kidston Wind as a prescribed project, and that's going to be of great help as we progress the development and environmental approvals which are already underway. And most importantly, we have been engaged very closely with potential off-takers. There's very strong interest for the wind project. You can see on the right there the very strong correlation of the daily resource profile of the wind at Kidston with demand in the market and high pricing in the morning and evening peaks, and also similarly the seasonal profile very strongly matches high demand in the summer months. So we're targeting an final investment decision later this year and commencement of construction on the project early next year, and that will also fit very well with the project team currently at site focused on the Kidston Hydro. Will be able to move straight on to applying all their knowledge locally of local resources, local labour, straight onto the Kidston Wind project. And finally, yeah, as I said, very excited indeed about the Bully Creek battery and solar project. We acquired the partially developed project back in August last year. It's around 2 gigawatts, a very strong part of the network, and we're looking at a combination of standalone large-scale battery and very large solar. We've been engaging with offtake counterparts in the last few months, and we can see very strong interest, not just in the battery, which is what we expected, but we thought the solar opportunity might be more medium term when we actually engaged in the transaction early last year. But it's become very clear that large-scale renewables, there is very, very strong demand indeed. So we are looking to accelerate the solar portion of the project. And we're now working hard on optimizing design layouts for sequenced staging of solar and battery phases of the project. And we've also kicked off procurement processes for those projects. As I say, it's a very interesting project. It's very close to the interconnector between New South Wales and Queensland, a very strong part of the network. It's got excellent marginal loss factors, MLFs, and yeah, we're really excited about the prospect of building out over the next few years up to 400 megawatts of BESS. We think that'll be a single standalone battery, 400 megawatts, 2 hours storage, and up to 1.6 gigawatts of solar, taking up the rest of the available capacity. It's a well-developed project in the sense that all the planning, cultural heritage, environmental approvals have been received already. So we're in a good place to really kick off the development activities. And we're looking to reach a final investment decision for stage 1 in the second half of next calendar year. So obviously, it's important to Queensland that the renewable energy transition accelerates. The Queensland government has acknowledged the importance of it for the state with their energy and jobs plan, which has ambitious targets of reaching 80% of renewable energy by 2035 and creating 100,000 jobs, many of them in remote areas. And obviously Genex with 2.6 gigawatts of projects either in operation in construction or in the pipeline, and the bulk of that is clearly in Queensland. Kidston Hydro alone is creating 900 jobs through the hydro project and the transmission line construction. Obviously, that's all in the rural community. And we're leveraging strong relationships we built up, not just with government, but with the government-owned corporations. Powerlink, clearly the network service provider, who we know extremely well, and also the large gentailers with whom we're engaged for offtake and other purposes. So we're obviously we place great importance on ESG. We want to treat our people well, our stakeholders, certainly the communities in which we operate, which are very often in remote areas, Indigenous communities, and of course the environment. We've taken on board last year an HSEQ manager full-time who's implementing the processes that are required for a healthy and safe environment. We are clearly at Kidston converting a disturbed mine site into a renewable energy generation facility, so that is a beneficial impact to the environment, and by all the renewable energy that we are not only generating but facilitating through our large storage projects, we're looking to abate huge amounts of CO2. And in terms of community engagement, we're very proud to be, I think, a leader in Indigenous engagement, in employing Indigenous workforce. We have 2 apprentices working directly for Genex at Kidston. We've encouraged our contractors to have a strong Indigenous engagement program, and we've been a sponsor of the UMIN, the local people up at Kidston, with a sponsorship for their new ecotourism venture, the Tallaroo Hot Springs, and so have a very close relationship with them, which also stands us in good stead for the development of the Kidston Wind project, which we're engaged with them very closely on at the moment. So just a final wrap up why we think Genex is a really exciting investment prospect. We have a diverse renewable energy and storage portfolio. We've got 400 megawatts of committed power generation and storage projects, 2 operating, 2 in construction, 1 in very detailed development, and a big pipeline to come. We've established a proven track record of executing projects successfully. We've developed to financial close over $1 billion of projects. We've secured long-term energy contracts, which provide secure cash flows. And we've built the first 2 plants that are in operation on time and on budget. So a pretty successful base on which to leverage our future pipeline development. We've developed strong relationships with tier 1 stakeholders across government and private sector. We have very strong revenue stream certainty. So over 80% of the revenue is contracted for up to 30 years. We've got high EBITDA margins and minimal sustaining capex and very low interest rates on average due to that NAIF loan. And what that does, that gives us the ability to have exposure to improved pricing dynamics. So projects that we're developing, obviously the Gemelong solar farm, which is still merchant, the Baldercombe battery, which has exposure to the merchant pricing and the volatility that we've seen in the market. So we're really excited about that project coming on board, and this very strong degree of revenue certainty does give us the ability to capture some of that upside. And the near-term development of pipeline opportunities, obviously the Kidston Wind, which we want to get to a final investment decision at the end of this year, and the Bully Creek battery and solar projects. The first of those we intend to get to market by the end of next year, with subsequent stages to follow on their heels. So that's it for the presentation. Thanks very much, and we're happy to take some Q&A.
Thanks, James. Thanks, Craig. Just a reminder for everybody, please use the Q&A facility at the bottom of the screen. Type your question in and I will read that out to James and Craig. Lots of questions coming in, not going to be surprised, but can you just provide a little bit of an update in terms of the failed bid, what happened and what the current status of engagement is with potential partners at the moment?
Yeah, Craig, you want to go from it?
Yeah, sure. And look, I guess probably preface this response with, yeah, we're quite limited in what we can say publicly, of course. However, you know, I think it's quite well known that that Genex received an approach from a consortium of Skip and Stone Peak in July. The board was not sort of willing to engage at the price that they approached us on, but after a revision to that price in August, we opened a period of due diligence and worked diligently with the consortium through that. I think it's a fair observation that the water ingress event at the hydro project in late September caused an extension of that period as the consortium sought to understand that, and we worked with them to sort of take them through that process as we ourselves identified the issue, got the critical path back on track, and ultimately determined the way forward, which was the realignment of the MAT, and we announced that in early December. We were conscious of ensuring that we didn't let things drag on too long. We didn't think that was a fair position for either party or the shareholders, and so sought the conclusion of the discussions prior to Christmas, and we made our announcement that the consortium was unable to proceed with a binding offer in December, and therefore we terminated discussions with them at that point in time. I think it's sort of been said publicly that that Skip is remaining perhaps maybe step backwards. There was an announcement on the 28th of December that the consortium had terminated their cooperation agreement, which no longer bound the two parties together, and I think Skip has said publicly that they remain a supportive shareholder of Genex, and we continue to engage with them constructively in that capacity as a 20% shareholder. We think there's a lot of upside in the portfolio as we sort of work through developing both Kidston Wind and Bully Creek. We think the issues of the hydro have been put behind us, and we've given that advice to the market that's resulting in a small cost increase to the overall financial close budget. But as far as we're concerned, we're now getting on with delivering the pipeline, delivering the projects in construction, and looking forward to revenue contribution from the first of those later this year, and certainly lots of development milestones expected this half on Kidston Wind and Bully Creek.
Thanks, Craig. Next question's on Kidston Wind. Potential to move that to a final investment decision by the end of 2013. Can you just talk through a little bit more of the steps that you need to get through between now and making that decision?
Yeah, sure, Craig. So as I mentioned, there's a number of different work streams which obviously need to proceed in parallel. Most importantly, the grid connection process, and clearly Powerlink are physically constructing that new link, the 185 kilometre transmission line from Mount Fox, or Gubal Manjan as the substation on the NEM is now called, out to Kidston. And we've had negotiations, I would say, with Powerlink over the last 12 months plus on how the substation at Kidston will look, and reconfiguring it as a so-called designated network asset. Now, that is a particular term that has come about from a rule change on the electricity market, which allows for new projects to connect at the remote end of a new transmission line, which is what the Powerlink Kidston transmission line is. So I guess you can say that we're well down the path with Powerlink on understanding what the requirements are to connect the wind farm project, being a new renewable project, onto the new transmission line at Kidston. So that process continues now and ramps up as we feed in the specific information from the turbine supplier into that process, and that's really going to be the focus for, well, from now on for the rest of the year. But certainly it's ramping up at the moment. We have, as I say, selected the turbine supplier and installer, and finalising an early contractor involvement agreement with them, and in parallel negotiating the TSI agreement. That's the supply and install agreement. We are running a process for balance of plant. That's for the electrical and civil works that relate to the new facility. So we were looking to engage a contractor within the next month or 6 weeks. And obviously the financing is key. We've appointed a financial advisor. J Power and ourselves, obviously working in co-development, have appointed a financial advisor to support us in putting the financial matrix together. And the offtake arrangements are very key to obviously securing the economics and securing any bank lending that we're going to get into the project. And as I mentioned earlier, we have run a process with selected off-takers, and we're in the process now of selecting based on agreed terms and looking to contract with offtake over the next few months. So those are the key areas. In terms of approvals, clearly development, EPBC, cultural heritage approvals are important. They've been progressing well over the last 12 months plus. Now that we have prescribed project status from Queensland Government awarded to us at the beginning of this month, we're able to accelerate those approval activities. And we have experience of doing that, obviously, with the Kidston Solar and the Kidston Hydro. They were both prescribed projects, so we can see the benefit of that status for that approval process.
Thanks, James. Just 2 follow-up questions are in the queue around Kidston Wind. How long will the construction phase for that be, and when do you anticipate energisation?
Yeah, so sort of a 30-month construction period. We're looking to kick off the construction sort of early next year, so first half of 2024. So we should be looking to, I'd say, energise in the second half of 2026.
Anticipated CapEx cost, I know that hasn't been disclosed, but just a question there around that estimated project cost.
You want to jump in there, Craig?
Yeah, look, I unfortunately haven't given guidance on CapEx yet to market. You know, 2 key components. The first is the wind turbine generator supply, which we've selected, and we've got pricing from Goldwind, which is only subject now to movements in raw material and FX rates. Balance of plant tender is underway, as James mentioned. Once all that sort of comes together, we'll issue updated guidance to the market on the CapEx of that project in time. But unfortunately, I'm not able to give that at this stage, other than just to comment that it's sort of ahead of where market benchmarks sort of might suggest the project will be.
Last one on Kidston Wind at the moment. What are you thinking around the revenue model? Something similar to what's been there with pumped hydro, or to be more a free pricing system?
Yeah, clearly this is a large project, and we sort of view it together with J-Power as something that will require a significant amount of leverage to make work from an economic perspective. So we are looking at a high level of contracted revenues. However, we do look at the sort of shape of the wind resource, and I think as part of that sort of revenue mix, we will be retaining a slice of merchant revenue to give us some upside on top of the contracted revenues. So I think it's fair to say that the offtake process has been well bid, and demand is good, and pricing is looking attractive, reflecting that strong profile. But we want to keep a little bit of that for ourselves, just to add some upside. And I guess we feel like we can do that because we look at our sort of revenue split on a portfolio basis, and with that 83% contracted revenue base, it does enable us to take on merchant risk in some projects where it makes sense to do so.
Thanks, Craig. Question on battery storage. Any other sites in the portfolio that you think you could look at rolling out over the near term to expand that battery strategy?
Yes, so we certainly are looking at other sites in Queensland and also potentially in New South Wales. I think we've indicated previously that we see sort of strategic location of batteries that have sort of different profiles, whether it's supporting renewable energy. So in sort of central and north Queensland, obviously strong renewable resources, weaker parts of the network, versus South Queensland, obviously a very strong part of the network. And so there's different drivers for battery development. But I think our view, and we've stated this previously, is that there's room for, within our portfolio, 2 or 3 batteries in Queensland. We have one strategically located in construction in central Queensland. We've got a very large battery potentially in South Queensland at Bully Creek, close to the interconnector there. And we see potential for another battery located further north in those areas of weaker network and high renewable penetration. And obviously New South Wales, we have a solar farm just outside Forbes. Clearly there's strong interest in the renewable energy zones being rolled out and underpinning those with storage. And we're certainly looking at opportunities in New South Wales as well.
Thanks. On battery technology, Tesla at the moment with Baldercombe, are you looking at staying with Tesla or looking at other types of batteries for Bully Creek and your potential other projects?
Yeah, look, we'll be looking at, for one thing, we're always keen to see how technology evolves and develops, and as indicated, the technology leader at a certain point in time won't necessarily remain so. That's the case. Secondly, we certainly need to retain competitive tension to make sure that we get the best commercial outcome. But obviously, at the moment, it's clear that there is a supply constraint in terms of the raw materials, lithium and other materials, and also just the supply of components and of systems installations. So we know Tesla now. We've got to know them very well. We've got an extremely good working relationship with them on Baldercombe. They're providing a very interesting offtake dynamic for that project, which we think is pretty exciting for Genex and shareholders. So we will be certainly engaging with Tesla, but not exclusively. We'll be looking to see what we can get as the best outcome for the particular project.
Maybe
Thanks,
just to add to that,
just remind.
Sorry, Craig. I guess we also, we take in our business construction and development risk, obviously, and certainly market risk. We have an appetite that might be a bit more unique than other participants in our sector. But I guess new technologies is not sort of in our sort of risk appetite. I think we always look at technologies that have been tested and proven in the market. So I think until there's new technologies that come along that have been sort of shown and proven in the NEM, then we'll sort of probably stick to the same lithium-ion technology.
Thanks. Just a reminder for anyone want to ask a question, please just type it into the Q&A facility and I will read it out. Last question at the moment is on solar. Any plans for more solar projects within the portfolio?
Yeah, absolutely. As I mentioned, the Bully Creek, there's 2 gigawatts of potential connection capacity at that substation at Bully Creek, which, as I say, is the southernmost Powerlink main substation closest to the New South Wales border, and on that QNI interconnector. The development includes a significant amount of land and in a very good solar resource area. So the option there is to put a combination of battery, which is obviously valuable. We're very close to the substation, but also solar. There is wind resource in the general vicinity, but not specifically at this location. So it's solar and or battery. And as I indicated, there is very strong interest in renewables, both solar and wind, particularly in Queensland at the moment, at large scale. I think the attractiveness is the ability to develop a pretty large solar farm in this case. And so, yes, we are working hard on a solar stage at Bully Creek alongside the battery stage.
Thanks, James. Craig, that's all for questions at the moment. So, James, I'll just hand back to you for any closing remarks.
Yeah, look, thanks, Craig, for organising. And very happy to have the opportunity, as always, to engage. Appreciate the questions. As I indicated, we see 2023 as a really exciting year for Genex. Obviously, the transition in the energy market is underway and ramping up. I think the obviously new federal government and seems to be alignment with the state governments on what's needed to make that transition happen. Clearly in Queensland, where we're pretty heavily invested and think we really know our way around, know the players, good relationships with government, and just an excellent market for renewables and for storage. We think we're really well placed to capture those opportunities. It's going to be an important year, obviously, for the hydro to complete effectively the construction works and start the installation of the equipment in the underground cavern at the beginning of next year. And we're really looking forward to have the Baldercombe battery starting to create revenues for us before the end of this year. And we think stakeholders will be as excited as we are when that happens to see what that means for our cash flow. So really exciting year. Appreciate, as always, all the support from shareholders And thanks again for joining us today.